late.
No, you're not late. Come on in.
Did I miss it?
You've missed the whole thing.
Did I miss
the
NAPE?
Closing remarks? NAPE is gone.
North American Project Expo? Did I miss it?
It's gone. Nobody's ever going to be here ever again.
What do you mean it's gone?
Well, you didn't show up. They all left.
I didn't show up.
Once they find out Energy Rogue's not here?
I got to go. No. Hey, everybody. Listen, it's Bill and Brian. We are here at NAPE, and we just grabbed a little spot. As you can see, we're down the hall from Starbucks and all the other
hot spots here at NAPE.
All the other hot spots. But we thought we would come to you live this week to talk a little bit about supply in the United States, especially since this conference, which is, for those listening that don't know much about it, it is the North American Project Expo. And what is the background of this?
This started a long time ago. As everything that gets big and everything else, it starts by landman.
Mm-hmm.
So a lot of people came here, and this is where they come to do their deals. Started in Houston. It's been going on for a very long time. But what has happened is now become more focused in all areas of the industry. And but it's still about deals getting done.
Right.
So what you'll see on the floors, you'll see people who's got deals they want to sell, development they want to do, all the other people who are around all that, all the service companies around all that.
So pretty much producers looking at projects.
Right.
And so.
Or selling projects.
Yeah.
Looking for financing.
So typically it's either producers looking to promote their projects looking for financing.
Right.
Or financing looking for projects.
Or landmen looking for producers.
Or landmen looking for producers. And I think, correct me if I'm wrong, aren't there like thousands of people here?
Yes, I think it's around 4,000 or 5,000 now when it comes down there. That's the register.
Right.
Realize there's a whole culture that goes around NAPE.
Yeah.
That people who aren't registered.
There was actually somebody on Twitter, I think it was Zach Frazier. Zach, if you're listening, hey. And Zach was talking about his pro tip is not to actually sign up for the conference, but just to be around.
He is such a hijacker.
So
Zach, we know your plans.
Yeah. So what Bill and I thought we would talk about this week is we would talk a little bit about supply, a little bit about the cross section and the history. If we look at supply over the last 5 years, we've been through wild 5 years. In 2018, 2019, supply was going bonkers.
Then there was another little thing. What was it?
There was something in 2020.
I'm
trying to look back on that.
No, it's the pandemic. That's what it was. Panoramic.
Yeah. That is actually when people started talking about the coronavirus. If you remember that one.
Oh, that's right.
That's what we
thought it came from Mexico.
Yeah. So I think there might have been some trademark infringement, and so they changed it to COVID.
Yeah.
So anyhow, they so in this expo, and when we're focused on supply, you can go back in time and actually look and see an amazing growth path from 2017 to 2019, and then COVID basically went off the rails. Everything dropped. Everything stopped. Crude oil, WTI actually went negative for a day. Here in the United States,
negative. Way negative.
$40. I think it was $40. So then after COVID, 2021, we started recovering to quote unquote normal. And in 2022, we went through rapid inflation, rapid expansion, and rapid catch up because everybody was catching up from this cycle of lack of consumption for so long.
Right.
And so 2022.
Lots of money, lots of jobs.
Lots of money, lots of jobs. And in the energy industry, lots of capital flowing into oil and gas projects. Right. Because at the time, oil was 100 something.
Right. I think we only got back up to over 100 for a very short period of time.
Yeah, it was. But
short. we were in the 90s for several months.
Absolutely. So 2022 was natural gas was hanging between $7 and $9. Of course, members of our service, we were actually discussing some of the concerns we had because we felt like the supply and demand was not supporting that level. So then on the supply side, we went through a rapid expansion in 2023. Crude oil in the United States grew by 1 million barrels a day in 2023.
13 point, did it get all the way to 13.6?
I think that year 13.2 or 13.3 was the top.
We've gone to 13.5 since then.
Yeah, so that was actually the story. Pardon me. The story of this past year. The story of this past year was kind of a resetting back to normal. So if you think about it, 2021 was trying to get back on track. 2022 was rapid expansion as the world was getting back to quote unquote normal. 2023 was catching up on all the backlog orders from 2022. 2024 is where supply and demand kind of balanced. And you could see that reflected in oil and gas prices.
Right, which also made them very volatile. When you're at a balance point, any little thing moves the market.
Right.
So any little lack of supply or increase in demand can make it volatile. And especially this winter with weather, we've seen just even in 2025, natural gas went to $9 for a few days in the Middle Eastern mid-continent.
In Oklahoma.
Oklahoma.
Um,
So that was another $9 trip back to get natural gas.
yeah.
Didn't last very long, 4 days, but it was there.
And with this expo being about production in the United States or in North America, Bill and I thought we'd center a little bit on supply. When we look at supply, there's kind of two components. One is production, and the other one is imports. So if we look at production grew during 2024, but at a much slower pace, and we grew mechanically, methodically, very step by step, just a little bit at a time. I think we were looking at it this morning. Wasn't it about 50,000 barrels a day each month?
Right. It was doing that, and it was, we're often accused of not having capital discipline in our industry. And I think our producers have been very disciplined with their capital in comparative to the last few years.
Right.
And in comparative really to the rest of the world.
Yeah. And so when we look at declines, something to bear in mind on the crude oil side is we decline by over 600,000 barrels a day each month. So that means we have to bring on over 600,000 barrels a day of new production or new supply. So
we have to bring on 650,000 barrels a day to get 50,000 barrels.
Yep.
Improvement.
In new production. So with the rigs, with declines, and with new production and the pace that we're at, we see more of the same right now. Now, part of what we're hoping to learn over the next couple of days is what is lying ahead. Are there mergers? Are there acquisitions? Last year was a big consolidation.
How many big fields are going on? Of course, we have, I think they got the governor's conference going on. It may even be going on right now, where we'll still hear what the governors of certain states are going to be saying about how they want to promote the industry in their state. And if you haven't watched it, you need to get back there and look at what Brian and I talked about, drill baby drill, how that doesn't mean that the price is going up. And so once again, you get too much of a thing, it goes down. And so Brian, we've had a pandemic, we've had the recovery, we've had high inflation rates, we've had high interest rates.
Right.
What could possibly happen next?
I don't know. How many different curveballs can we have in the last?
I saw a shirt the other day. I think you would like it.
What's that?
It's a black shirt, white lettering right across here. It says, "Terrific."
Little play on words there. So what we're looking at, and when we're talking about that, we see more of the same on the supply side. Over the next couple of days, we hope to garner a little bit of insight from producers that are selling projects, selling prospects, and really see what's ahead of us. But when we look at the raw numbers, it's going to be more of the same to start 2025 until we see more rigs deployed. I will say one of the things that is important when we're talking about supply is where we sit on imports.
Right.
Now,
so first of all, when we start talking about crude oil, you got Canadian imports crude oil come down Keystone Pipeline. Why do we like Canadian oil? Because it's good for our refineries. The refineries like that heavy oil that comes down from Canada. That's good. The other imports are coming in from the Middle East, some from South America. But we also have exports going out. A lot of our light crude oil is being exported, about 3 million, maybe almost 4 million barrels a day.
Yeah.
And so you've got all that going on. So when you start throwing in, we talk about it, it's geopolitical influence. And I was telling Brian coming over here, you don't ever hear geofundamental. What you hear is geopolitical.
That's another T-shirt.
Yeah, I think so. That's another T-shirt. So when you start talking about geopolitics, now we've got an administration, and I'm not saying anything good or bad about this administration. What I'm saying is that they're going to change the game a little bit.
Yeah.
So you need to be ready for that because it's going to bring in volatility.
Right.
And do we know which way it's going? I don't. Yeah, no messages from him yet.
However,
when he does, I'll let you know what's going on.
However, if you are interested in the market, the prices, and what is going on, our service at energyroad.com. We offer a low-priced subscription that gives you insight into the industry. We have 2 levels.
Wait.
What?
That's a value-driven price.
It's
not a low price.
Value-driven.
It's a value-driven price.
Well, it is a value-driven price, and actually, one of the many of our customers that are in the energy industry keep saying, when are you raising prices? I know you're going to do the same thing that Netflix does. Apologies, Netflix, but yes, I'm talking to you.
Yeah, that's right. Call them out, Brian. Call them out.
Yeah. So people that are with us, we freeze their price at their level. We have raised our prices over the years, and people that get in with us at this level will not pay any more over time. So we have 2 levels of products. We have Rogue Radar and Rogue Edge. Rogue Radar will give you 2 PDF reports, 2 videos a week, and Rogue Edge is going to give you access to our 150 chart library on natural gas liquids, crude oil, refined products, electricity, rigs, maps, so much more. Inclusive in that is an AI trading co-pilot, along with technicals and access to our Discord community, which means we will give you insight. Bill and Brian will give you insight on your trading ideas and hedging ideas. And so it's value.
And you'll be able to see our new thing we offer is geofundamentals.
Geofundamentals. Yeah. So commercial over, but with us talking about supply, we see more of the same on the production side.
Right.
That's what I see. Is that what you see?
The thing is, they're getting to the points to where, they still got to make a profit.
Right.
So if the price gets down low enough, they're going to tighten up. I mean, similar to what we were seeing with the gas happening out in Pennsylvania, places like that. They're bringing the gas on, the price is high. Then they're shutting it back in. They're very, very disciplined about their production.
So what Bill's talking about is if you go back a month ago, natural gas production in the United States was below 100 BCF a day. We just hit 107 BCF a day. Now, most of that uptick came from the Appalachia region, which means that there were some valves turned to capture the high prices during this time of year. So this is a short-term dynamic that come March or April will be tempered back.
It's always a question. Do you want to produce 1,000 at $6 or 3,000 at $2?
Yeah.
You'll go for the 1,000 for $6 every time because you save your commodity.
Yeah. So that's what's happening on the gas side. The crude oil side is staying pretty steady at about 13.5, roughly, plus or minus 100,000 barrels a day, 13.5 million barrels a day. We do expect a little bit of growth, but not a lot based upon the rigs that we're seeing today. And so that's about production.
That's triggers. That main triggers in the Permian.
Yeah.
That you're going to see most of that happening. And the Permian, it's not just crude oil, it's natural gas. So you have to watch the whole commodity stream in the Permian to be able to tell which way the production is going to go.
Well, and
because you have to look at the liquids as well.
With the consolidation in the Permian, we also see that with that consolidation, usually that means that there's going to be a slowdown of the activity there.
Right.
Because most of the...
It becomes more deliberate.
It's going to be more methodical and drawn out over time, you are going to see a more consistent flow path out of the Permian. It's going to be slower, more deliberate, and because of that, it's just going to be slower. So, what do you see on tariffs? Because we just got out of a great meeting, and Christian, Max, if y'all are listening, hey, good to see you.
You know, I don't think we really know. The devil's going to be in the details. I think right now, you know, guys, you just go out and read his book. He's just follow his book.
Whose book?
Dr. Trump.
Wait, how did he become a doctor?
Huh?
When did this happen?
Well, he seems to be trying to manage everything, so he must be a doctor because all doctors do.
No.
So really, I mean, what it is this: all these are negotiation politics, and so it'll be interesting. You know, it's sort of like if you got a big old ship heading down a way, and you're trying to turn it. The first time you pull on the wheel, not much happens.
Right.
But as you hang onto that wheel, turn to the left, it's going to eventually turn around.
That's right.
And so that's what we're seeing. This is the first pull on the wheel. And so Brian and I probably have different ideas on what these tariffs are going to do. I think the impact will be negligible. I think Brian thinks we're heading off into a dangerous territory. But, you know, that's why we do this, is because we both have our ideas of what's going to happen.
It impacts geofundamentals.
It impacts geofundamentals specifically. And so, so all I'm telling you is that if nothing else is going to create a lot of volatility.
Right.
And so that's what you've got to be careful for about your volatility. And that's what we warn people about. Now, I know some of you traders, you live for volatility. Well, it's coming.
Well, that volatility is going to be there, and you need to ensure that you're staying on top of things that are happening, things that are changing, and the data and the analytics. And that's one thing that we were just talking about this morning, is we were talking about the fact that Canadian tariffs, that actually came up with a thumbs up on my phone.
Oh, there you go.
Canadian tariffs actually impacted the market. Price went down by $2 or up by $2 and then back down by another $1.
Yeah.
So the market is still trying to figure out what to do with the tariffs, because the market dipped and then increased based upon that. And what we've seen on WTI as a whole is a return to a demand-focused variable. And the variables to look at on crude oil are going to be tariffs in the United States, tariffs in China, because they actually went back and are slapping tariffs on coal and LNG delivered to China, sanctions on Iran, sanctions on Russia, whether those will be enforced, because both of those countries have grown production and exports under sanctions.
Really, and sanctions is another form of tariff. But to let you sort of understand how all this stuff works, go read up on I know this is going to sound crazy, the chicken tax. The chicken tariff.
You made that up.
No. Back almost 60 years ago now, there was a tariff put on imported small pickups from Japan because they had put a tariff on our chickens going into Japan.
Oh my gosh.
Guess what? It's still in place today. That's the danger of tariffs.
The chicken tax?
Yes.
Wow. So look and see when where your chicken is actually from.
Yeah. You might see where your chicken's being taxed.
If it's free range from where?
Yeah, that's right.
So,
or if it's just swimming.
So listen, folks, we're going to make this kind of quick today. We're obviously on our mobile setup, so we're not managing comments right now. We will get back to your comments, so please drop us your comments, your thoughts. But basically, this is around North American supply. We see supply is more of the same. Tariffs are going to impact supply and demand. We don't know how yet, but
certainly going to increase volatility.
Well, I will say if if tariffs are on Canadian imports, we are going to be importing less from Canada, which is going to raise prices. And that's
the reason. They can't put a tariff on Canada.
Why?
Well, why would you tariff one of our states?
You know what? He's still on the imperial system. All our Canadian friends, I mean,
Hey,
the metric system is where to go.
that's what the stormtroopers were on. They were on the Imperial system.
So we'll end with a question. What makes more sense? 1,000 meters to a kilometer or 50 to 80 to a mile? Think about that.
You don't want to go down that path. Hey, listen, guys, we appreciate it. We really appreciate your watching us, keeping up with us on the live show. If you are in Houston at NAPE, we're going to be on the floor. Hunt us out. You can specifically find us at OGGN Podcast Pavilion.
Yes.
We'll be over there for some of the time. And also, you'll be able to find us over in the Reese booth, Reese Energy Consulting. And we'll be over there with those guys a little bit. And then we'll just be all over the place.
Yeah.
So hunt us down. Listen, we'd love to talk to you and see and give us some feedback on how you think things are going for us.
Yeah.
Because, it's all about us.
It is. Well, listen, folks, thanks so much. Really appreciate you watching, tuning in. This is our second live that we did on location at NAPE, and I think this time was a little better.
Oh, yeah.
A little better. Let us know how we did in the comments, and look forward to hearing from you. And as Bill said, if you are in Houston, message us on LinkedIn, so we'll be happy to.
Yeah, come down here. I think I can get Brian to buy you dinner.
Yeah, maybe so. So, listen, folks, thanks so much. Really appreciate you. And now we're going to do the old.
There it comes.
So listen, y'all enjoy your day, and we will talk very, very soon.